Hey Cosmic fam, welcome back to We Are Cosmic, your go-to spot for understanding the future of finance and crypto in simple, easy-to-grasp terms. Today, we have some exciting updates coming straight from the world of crypto regulation, institutional adoption, and Bitcoin. If you've been wondering what's next for XRP, Bitcoin, and the broader market, then this is your deep dive. Let's kick things off with something that could reshape the crypto industry in the United States, the Clarity Act. Now, if you haven't heard about this, don't worry, I'll break it down for you. Last year, the House passed their version of the Clarity Act. This was a huge step because it showed that lawmakers are serious about crypto regulation and clarity for banks and institutions. But here's the catch. When the bill went to the Senate, they made some changes. This slowed down the process and made bipartisan support tricky. So what does this mean for crypto investors like you and me? Well, we're not stuck forever. The House portion dealing with the CFTC, which handles commodities like Bitcoin and XRP, has already passed. But the Senate's portion, which deals with the SEC and securities regulations, is still being worked on. There was a markup session scheduled for January 18th, but it got postponed. Why? Because lawmakers need to address some concerns raised during the process. The good news? Work is actively being done to get this back on track. Once both parts of the bill pass their respective committees, they'll have to be reconciled before a final vote on the Senate floor. So yes, there's more work ahead, but we're definitely a step closer. Here's why this is a big deal for banks and investors. Patrick Witt recently explained that banks like JP Morgan see massive opportunities in the crypto space. Job postings for digital asset positions are booming. This means big banks are getting serious about crypto, not because they're forced to, but because they see trillions of dollars waiting on the sidelines. These institutional funds are waiting for clear regulations before they dive in. Once clarity hits, expect a surge of activity in crypto markets. And it's not just about banks. Regulatory clarity means more liquidity, more institutional participation, and more security for retail investors like us. Think of it like this. Before, many people hesitated to invest in crypto because the rules were unclear. Now, with frameworks like the Clarity Act moving forward, investors can enter the market with confidence. Another interesting point, retail investors have been cautious after events like the October 10th liquidation, which wiped out a lot of small investors. This is why a lot of crypto projects are struggling. They lack liquidity, community support, or the resources to move forward. Only strong projects with real technology and clear market demand are likely to survive and thrive. Smaller projects may either get acquired by bigger companies or fade away. So Cosmic Fam, this is the perfect time to focus on the right opportunities. Projects like XRP, Stellar, and a few blockchain infrastructure plays are likely to benefit the most as institutional adoption ramps up. The Clarity Act may seem like politics, but its effect on crypto could be huge, setting the stage for a more regulated yet expansive digital asset market. How major banks are racing to adopt blockchain and digital assets. This is where things get really interesting because it shows that crypto is no longer just for retail investors or tech enthusiasts. It's becoming mainstream finance. At the recent Consensus Conference, executives from the world's largest banks made it clear they believe financial assets will be tokenized. What does that mean? Essentially, stocks, bonds, and other financial instruments could soon exist on blockchain networks, making them easier, faster, and cheaper to trade. Banks see that if they don't adopt this technology now, their competitors will, and that's a risk they cannot take. Patrick Witt also highlighted that banks like JP Morgan are not just watching from the sidelines, they are actively hiring for digital asset roles and exploring ways to integrate crypto into their existing operations. From stablecoins backed by T-bills to institutional liquidity in treasury markets, there's a clear opportunity for banks to profit while supporting the growth of crypto. This isn't just hype, it's a strategic move to stay relevant in a rapidly changing financial world. One of the most important points Patrick made is that trillions of dollars are waiting to enter the crypto market. Why haven't they yet? Institutional investors are waiting for clear regulation. Once frameworks like the Clarity Act are finalized, these funds are likely to flow into crypto, which could dramatically increase market liquidity. That's why understanding regulatory developments is crucial for any investor. It's the key to predicting where the market might go next. The digital arms race isn't limited to the US either. Banks in Asia and other global regions are watching closely. Many are ready to follow the US's lead on regulation and are preparing to deploy tokenized financial products. Essentially, we're seeing a global competition to be first in the digital finance space, and early movers are likely to gain a massive advantage. Another angle to consider is the retail market. Many retail investors have been cautious recently, especially after events like the October 10th liquidation. Large swings wiped out some retail positions, leaving investors hesitant. Meanwhile, institutional players are positioning themselves strategically, ready to capitalize once market conditions stabilize. This combination of cautious retail and prepared institutions creates a perfect environment for a surge in crypto adoption once the regulatory path is clear. It's also important to note that not all projects will survive this next phase. Many smaller crypto companies lack the liquidity, community support, or infrastructure to thrive in a market dominated by large institutions. The winners will likely be projects with proven technology, strong teams, and the ability to scale. Think of XRP, Stellar, and other blockchain infrastructure projects that already have use cases and institutional interest. These are the projects likely to attract serious investment and adoption. Cosmic Fam, this is a turning point for the crypto industry. Banks adopting crypto means more credibility, more liquidity, and a faster path to mainstream usage. It also signals a shift from a purely speculative market to one where crypto plays a functional role in the global financial system. This is why paying attention to bank involvement and regulatory clarity is more important than ever. It will directly impact which assets thrive and which fade away. Finally, here's something to think about. The race isn't just about trading or investment, it's about building infrastructure for the future. Banks, super apps like Robinhood, and platforms like Coinbase are all positioning themselves to offer integrated services from banking to trading to prediction markets. Whoever captures the first mover advantage in this space will likely set the standard for digital finance for years to come. First, let's talk about Robinhood. Recently, they announced the testnet of the Robinhood chain, their very own blockchain. The goal? To become a world leader in trading real-world assets that have been tokenized. Tokenization simply means taking something like a stock, bond, or even a house and turning it into a digital token that can be traded on a blockchain. This creates faster, cheaper, and more accessible financial products for everyone. Robinhood isn't alone in this. Elon Musk with X Money, Coinbase, and other platforms are all racing to create integrated platforms, or super apps. These apps aim to combine banking, investing, crypto trading, and even prediction markets in one seamless ecosystem. Imagine being able to pay bills, trade crypto, buy stocks, and make bets on prediction markets all within a single app. That's the future these companies are building. Now, you might wonder, why are prediction markets important? Well, prediction markets allow people to bet on the outcomes of real-world events, like elections, economic trends, or even cryptocurrency prices. They're not just for fun. They can be used to forecast trends, hedge risks, and make smarter financial decisions. Platforms integrating prediction markets with crypto and tokenized assets create a new layer of financial innovation that hasn't existed before. Vlad from Robinhood even mentioned that what they're aiming for is an integrated financial super app. Unlike traditional apps that focus on one thing, super apps bring multiple services together. Users can trade crypto, invest in stocks, manage finances, and use credit products all in a single platform. The advantage? Faster adoption, more engagement, and a seamless user experience. This shift is also connected to the larger digital arms race we discussed in part 2. Companies that launch super apps first gain a first mover advantage, attracting more users and building stronger ecosystems. That's why platforms like Robinhood, Coinbase, and X Money are pushing hard to be the leaders in tokenization and integrated financial services. Another key trend is real-world asset tokenization. We're not just talking about crypto coins anymore, we're talking about turning stocks, bonds, commodities, and even real estate into tradable digital tokens. This allows investors to buy fractions of expensive assets, trade 24/7, and reduce transaction costs. For example, instead of buying an entire property, you could buy a token representing a portion of it. This opens opportunities for retail investors and smaller players to participate in markets that were previously limited to large institutions. Cosmic Fam, this is important. The infrastructure being built now will define how we interact with money and assets for the next decade. Banks, super apps, and blockchain platforms are all positioning themselves to be at the center of this financial revolution. It's not just about speculation. It's about creating systems that integrate traditional finance with the digital world, making it more efficient, inclusive, and innovative. Finally, consider the scale of this transformation. The combination of super apps, tokenization, and prediction markets is creating an environment where finance becomes accessible 24/7, automated, and globally connected. And for crypto investors, this means mass adoption, more liquidity, and a broader market for assets like XRP, Stellar, HBAR, and others. Let's start with inflation and deflation. Recently in the US, inflation has been dropping. We're seeing numbers around 0.8% for consumer prices, and even some indicators are pointing toward deflation in certain sectors. Deflation might sound scary, but in the case of technology and AI, it's actually a sign of progress. For example, the cost of AI training and inference is dropping dramatically, meaning technology is becoming cheaper and more efficient. This is good deflation, which creates opportunities for innovation and growth. Now, why does this matter for Bitcoin? Bitcoin is often called a digital hedge against inflation, but macro trends still affect its short-term price. For instance, when inflation is low or negative, people might temporarily feel less urgency to buy Bitcoin as a store of value. However, Bitcoin's long-term supply-limited structure, only 21 million coins, means that over time it remains a powerful tool for wealth preservation, especially when compared to currencies that can be printed freely. Let's also talk about Wall Street and Bitcoin. In the past, many analysts and investors dismissed Bitcoin, saying it was a fad or would fail. But today, nearly every major financial institution has a Bitcoin strategy. ETFs, futures, and custody solutions have made Bitcoin accessible to traditional investors. Even those who predicted Bitcoin would go to zero are now offering products tied to it. This shows that Bitcoin has successfully infiltrated Wall Street and is now part of mainstream finance. Another important trend is the global Bitcoin arms race. Countries like the US, UAE, and others are strategically accumulating Bitcoin. The goal is to establish reserves and prepare for a future where digital assets play a bigger role in global finance. Not every country is on board. Some European banks or central banks remain cautious because of Bitcoin's past association with illegal activities. But the overall trend is clear. Bitcoin and other digital assets are gaining legitimacy on a global scale. Anthony Papiano and other experts point out that Bitcoin's short-term price swings shouldn't worry investors too much. While leverage and financialization can create volatility, dollar cost averaging and holding Bitcoin long-term still provides strong growth potential. Think of the last 15 years. Bitcoin went from pennies to over $126,000 at its peak. The temporary price dips are actually opportunities for investors to accumulate more at lower prices. Ralph Paul also emphasizes that Bitcoin is influenced by the business cycle, not just a 4-year price cycle. The current cycle is longer than usual, about 5.4 years, due to extended debt maturities. This affects interest rates, borrowing, and liquidity, which in turn influences how much money flows into risk assets like Bitcoin. Lower rates in the future will encourage more investment in crypto, setting the stage for the next super cycle. Cosmic Fam, the takeaway here is clear. Macro trends like inflation, deflation, interest rates, and debt cycles all influence Bitcoin and crypto adoption. But the long-term story remains strong. With institutional investment, regulatory clarity, and global adoption, Bitcoin is positioned for significant growth. Short-term dips, don't worry about them. They're part of the normal market rhythm. Now that we've covered regulation, banks, super apps, and macro trends, it's time to zoom in on specific crypto projects that are likely to thrive in this new financial era. Not every crypto project will survive the next phase of adoption, only the ones with strong technology, real use cases, and institutional interest. Let's start with XRP. XRP has consistently been in the spotlight because of its speed, low transaction cost, and strong partnerships with banks. With the Clarity Act moving forward and institutional adoption accelerating, XRP is in a prime position to benefit. Banks and financial institutions are looking for ways to move money faster across borders, and XRP's payment protocol, the XRP Ledger, is already designed for this. This isn't just speculation. Real adoption is happening behind the scenes, which could drive both utility and demand. Next up is HBAR, Hedera Hashgraph. HBAR focuses on enterprise-grade applications and highly secure, fast transactions. Unlike some other networks, Hedera is designed for large-scale adoption by companies, governments, and even decentralized apps. This positions HBR as a project that could capture institutional and enterprise interest, especially as banks and corporates explore blockchain solutions. Then we have Stellar, XLM. Stellar has a long history of focusing on cross-border payments and financial inclusion. Stellar's network is ideal for tokenizing assets and sending money across countries quickly and cheaply. As banks and payment providers adopt blockchain infrastructure, Stellar's technology could see significant institutional integration, which would increase both utility and market value. It's also important to consider infrastructure plays, which may not be as flashy as individual coins, but are critical for the crypto ecosystem. These include blockchain platforms, tokenization frameworks, and custody solutions. Think of projects that provide the backbone for banks, super apps, and digital asset services. These projects may not make headlines every day, but they are essential for the growth of the entire industry. As institutions pour money into crypto, infrastructure projects will see steady adoption and long-term value appreciation. Cosmic Fam, here's a key point. Not all projects are created equal. Many smaller tokens lack liquidity, developer support, or real use cases, which means they might fall by the wayside. Larger, well-supported projects with real-world utility will either survive or acquire the technology of smaller players. This is why focusing on strong, institutional-ready projects is so important for anyone looking to invest smartly in crypto. Another interesting trend is that lower prices today are creating opportunities for savvy investors. Market dips allow you to accumulate assets like XRP, HBAR, and Stellar at attractive levels, positioning yourself for potential gains as adoption grows. Remember, the market is cyclical. Institutional adoption, regulatory clarity, and technological integration are the drivers that matter most, not short-term price swings. Finally, Cosmic Fam, the next wave of growth in crypto isn't about hype or memes. It's about utility, adoption, and infrastructure. As banks, super apps, and governments adopt digital assets, projects that solve real problems will thrive. XRP for payments, HBAR for enterprise applications, Stellar for cross-border transactions, and strong infrastructure projects. These are the ones to watch. They represent the future of finance. We've covered a lot so far, from regulation, banks, and super apps to Bitcoin, macro trends, and specific crypto opportunities. Now it's time to connect all the dots and see what the crypto market might look like in 2026 and how you can position yourself wisely as an investor. First, let's recap the regulatory landscape. The Clarity Act is moving forward in the US, and while it has faced delays and committee revisions, it's a major step toward clarity for crypto and banks. Why does this matter? Regulatory clarity reduces uncertainty, which encourages institutional money to flow into crypto. Once regulations are finalized, we can expect trillions of dollars from institutions to start participating, which could drive both liquidity and adoption. This ties directly into the banking and institutional adoption story. Big players like JP Morgan and global banks in Asia and Europe are actively preparing to engage with crypto. They see tokenization and digital assets as inevitable. Institutions are not just observing, they are building infrastructure, hiring talent, and creating strategies to leverage blockchain technology. For retail investors, this means a more stable and professionalized market over time. Next, the super app revolution is changing how we interact with finance. Platforms like Robinhood, Coinbase, and X-Money are building apps that integrate banking, investing, crypto trading, and prediction markets. This consolidation allows for seamless user experiences and 24/7 access to financial services. It's not just convenience. It's creating new financial ecosystems where crypto is a functional part of everyday life. Then we have the macro picture. Inflation and deflation trends, interest rates, and business cycles all impact crypto adoption. Lower rates encourage borrowing and investment, while deflation driven by technology and AI can reduce costs across sectors. Bitcoin, despite short-term price fluctuations, remains a strong long-term asset, and macro trends indicate more institutional adoption is likely as rates adjust and clarity in regulations is established. Now, let's connect this to specific crypto opportunities. XRP, Stellar, HBAR, and infrastructure projects are positioned to benefit from these trends. XRP is ready for bank payments and cross-border transactions. Stellar enables global remittances and tokenized assets. HBR focuses on enterprise-grade blockchain applications. Infrastructure projects support the whole ecosystem, allowing banks and apps to integrate crypto seamlessly. Investing in these projects strategically allows you to participate in the next wave of adoption. Here's the practical takeaway for Cosmic Fam. The market will continue to experience volatility, but the long-term trends are clear. Focus on institutional-ready projects, those with technology, adoption, and scalability. Macro-informed timing, consider interest rates, liquidity, and regulatory developments. Dollar cost averaging, accumulate over time instead of trying to time the market perfectly. Watching adoption signals, super apps, banks entering the space, and tokenization efforts are key indicators. Finally, remember this. The crypto landscape in 2026 is not just about speculation. It's about creating, building, and integrating financial systems for the digital age. Those who understand the trends, choose the right projects, and position themselves for long-term adoption will benefit the most. Cosmic fam, it's an exciting time to be involved in crypto. From the Clarity Act to super apps, tokenization, and institutional adoption, the stage is set for a new era in finance. If you found value in this breakdown, make sure to hit that like button, comment below with your strategies, and stay tuned to We Are Cosmic for all the latest updates. The future is digital, the future is decentralized, and the future is now. Stay curious, stay informed, and stay cosmic.